Hi guys, how are you? This one Titanium, founder of Investing MMT and co-founder of Pure MMT for the 100% Beyond the Memes. And I run a Patreon channel teaching people how to apply real MMT to the real world and also teach them how to invest. If this is something that you're interested in and you really want to understand MMT and how it really works, come on down and join us at Patreon. It's just a $5 fee, and that's mostly to keep the trolls out. I'm not trying to make money off of this, like some other people who sit there and promise you all profits and ooh, you'll be rich and just the whole thing is double down and just buy and never sell and you'll be rich. Yeah, okay, that's bullshit. That's just people not knowing what the hell they're talking about. Okay, they don't know how to trade, so they just try to word their way through trading. Somehow it's your fault if you don't listen, and everybody else is a zombie except you. You're the smart one, and if you don't agree and you figure out that your account is getting blown out, well, you're just weak. You're just a pussy. It's insanity. But people fall for it, and that's fine. But for $5, you come down, you see the difference. I teach you how to fish. I teach you how to invest. I teach you how to really understand MMT. Not this nonsense that, we're raising rates, it's going to be inflationary, buy gold at $1,350, and now it's what, $1,250 or something? Right? 2 years later, we started raising rates back in December of 2015. We're going now into 2018, and we're still waiting for that inflation. Again, if you if you insist on getting scammed and paying hundreds of dollars in and subscriptions that don't work, okay? They're going to give you signals and make you all rich. If you're going to fall for that, you should go buy some Bitcoin too. It's down, what, $7,000 today? Yeah. Woohoo! Anyway, we'll talk a little bit about Bitcoin, but we really need to talk about these doom and gloom, fear-mongering, bear shitters. And this, America is declining. The implosion is coming. Everything is bad. So we're going to debunk these people, and we'll see where the market has been this year, where it's going to go next year, more likely than not, and what we should expect. So let's get started. All right, I use this website because it includes not only price appreciation, but it also includes dividends. And as you can see, we have from 14% all the way up to 34% in the stock market. Okay, international stocks up 23%, emerging markets up 26%. Everything is firing in all cylinders, and yet these people insist on constantly saying, "Well, the world's coming to an end," and then they're going to give me this bullshit story. Well, Nick, the stock market is not the real economy. Really? So why did the stock market crash in 2008 down 60%? And why has the stock market been rising, okay, in the greatest bull market of all time for the past 10 years? You see, you like to sit there and yap about, small little sound bites that you think make you smart. But in reality, you sound like an idiot because you don't understand. Okay, so you're trying to mask it. You're trying to use some, verbiage that is going to make you look good. It's not going to work with me. You don't know what you're talking about. So let's go over some of these economic data. The first thing you need to know is that income per American is among the highest in the world. It's higher than the EU 15. It's higher than Japan. It's higher than the world, and it's higher than China and India. All right, that's just a fact. So don't give me this, well, we have garbage jobs. Yeah, they're garbage. No. We have the highest income. Job openings, 6 million. So for every person that's unemployed, there's one job. That's what that means. That's what 6 million means. And here it is. Number of unemployed workers per job vacancy at new all-time low, 1.08. New all-time low. But you know what? Damn it, not good enough. America's in decline. You know what they want to talk about? I'll tell you what they want to talk about. Labor force participation rate. Well, the labor force participation rate is down. Really? It's down? How much is it down? Because if you add 1.5%, guess what? You're back to what? 2004 levels, and you're only 1% below, or 1.5% below in the 90s. This is the end all of all fucking economic analysis. This is all the best you can do. But you know what? They're gonna just keep bringing the same thing up. Well, it's labor force participation, man. You're not looking at that. I'm looking at it. I don't have a problem with it. Is GDP growing? Yep. Is unemployment falling? Yep. You see? They don't understand. But show them the JOLTS number. Well, we don't want to look at that. Suddenly, they don't want to acknowledge that. You show them an income per American. Oh, don't like that either. Let's go back to labor force participation. Let's talk about that. How about percent ratio of initial unemployment claims to civilian labor force participation? Record low. Record low. See it? Record low. Do we want to talk about that? No, we don't want to talk about that. Labor force participation. America's in decline. Insanity. So then you show them, you're like, oh, look, dude, calm down with this job guarantee and UBI nonsense. Unemployment is for 4.1%. Why in the world would you want a job guarantee at 4.1%? Okay, and that includes teenagers, 16 years old plus. You go all the way back to 1998, and guess what? It's 4.1%. But you know what? Not good enough. Nope, not good enough. Show them unemployment insurance weekly report. 231. Go all the way back into what? 69? Not good enough. Let's look at labor force participation, man. Right? This is how insane they are. We need a job guarantee. And what's really funny is when you show them 4.1% unemployment, oh, that's fake. Unemployment is much higher. And then you go, yeah, that's the U6 number. It's 8%. Let's look at it. Let's go all the way back to 1996, and guess what? It was 8% then. So you really need to understand what you're talking about. You can't just say, well, it's fake. For 10 years, you people have been telling us how America is over, how hyperinflation is coming, QE1 is going to destroy us, wait till it ends and you'll see the implosion. Then it ended, didn't happen. Well, QE2, see, it's QE2. Now it's going to be hyperinflation. Then QE3, it's QE infinity. It's done. We're finished, my friend. It's this was manipulation. Then that ended. Well, they're not going to raise rates. You're going to see. We raised rates and kept raising rates. Where's the implosion? Nowhere. Well, we're not going to unwind the balance sheet, of the Fed balance sheet. We're unwinding the Fed balance sheet. Where are we? All-time highs. Economy is growing. Employment is falling. And these are MMTers, or so-called fake MMTers. And they just, America's in decline. Implosion is coming. This is unsustainable. And they just keep saying it 10 years later. Insane, man, insane. Beyond belief. Well, they're garbage jobs. They're not really good jobs. Really? Let's look at it. Full-time employment. Okay? Where is it today? 89%. Where was it in 2007? 89%. How about part-time? 11%. Where was it in 2007? 11%. Garbage jobs? Really? I mean, come on, man. How about wages? Wages have grown to 26.2% since 2000. Year over year, it's up, 9%? Yeah, but it's not going up fast enough. Yeah, but this is real wage growth, meaning, inflation adjusted. So let's think about this. We've reduced the debt. Service payments is, all-time lows, at least multi-decade lows. We have lowered unemployment. We have grown GDP by 3%. We have done everything that we are supposed to do. And still we got wage growth. Still we're up 26% since 2000. But you know what? Not good enough. Look at labor force participation. Garbage jobs. I just showed you. It's not garbage jobs. It's not garbage jobs. But you keep saying it. But when you show them the poverty rate in the United States has fallen since 2009. Right? We are back in the 90s. We're better than the 90s, actually. Right? No, we don't want to talk about that. This is fake government data. Everything is fake to these people. But for them to sit here and question just once, just out of fucking curiosity, be like, you know what? 10 years I've been saying the implosion is coming, and 10 years I've been wrong. Maybe I should go out and figure this out? Maybe. I don't know. Maybe I'm wrong? Nope. Nope. Just keep, pounding the table, beating the drum, same bullshit, pitchforks, tax the rich, neoliberalism, and nothing is ever good. Let's get a job guarantee. As if a job guarantee is going to do what exactly? Provide jobs for convicts, drug users, high school dropouts, single moms, people that are just transitioning normally through one job to the other, people like me who are overseas, who are recognized as unemployed in the U.S., but I work overseas, or other people who just made enough money and said, fuck it, I'm going to live my life, right? That's all. That's all unemployed, right? It's considered unemployed. So you want to create jobs for them, and you think what, the $23,000 is they're gonna save that money, and they're gonna go out into the savings bubble and get a bigger share of it? Are you insane? It's politics, man. It's the left, it's the right, it's this, it's that. Politics. GDP has been growing since 1945. Didn't matter if it was Carter, if it was Bush, or if it was Bush Jr., or if it was Obama, or if it was Clinton, or whoever the hell it was. Did it matter? Didn't matter. Didn't matter who controlled the Congress, who controlled the Senate, who was in the White House. Zero fucks given. I mean, did we go through the recessions? Of course we did. So what? What happened in GDP? It grew. That's economics. That's the way it works. Alright? Don't sit here and try to, get donations and sell T-shirts and Soviet-style, vodka mugs so you can make some money, or subscriptions, and I know what's going to happen in the future. Yeah? Well, you all know what's going to happen in the future. GDP is going to grow. Okay? Stock market is going to go up. There you go. That's all you need to know. You can give me that money now. Okay? Wow. This is another one of my favorites. The weaponization of the dollar. The weaponization. Do you really seriously think that other countries are not going to do business with the greatest, biggest economy in the history of mankind ever? Ever. Because we're weaponizing the dollar. We're going to do what? Go to Bitcoin? You're insane if you believe this stuff. You are insane. No one in their right mind is going to stop doing business with the U.S. Okay? They're not. Just the way it is. But the pitchforkers, the fearmongers, the subscription sellers, those guys, man, they'll sell you any kind of bullshit. They'll cry on fucking YouTube, start screaming and start, death to the Democrats, or they must die, I don't know, nonsense. Fists up in the air everywhere, pitchforks, revolution, we're going to create an army. What the hell's wrong with you? This is insanity. I think this picture of Logan says it all. Right there. It just, everything just in one motion. No words. And when you show like retail sales like this, where it's just, it's just blowing out the numbers, right? And people are saying that, well, they're, they don't have a job, man. And the jobs are just the garbage jobs. It's unemployment, right? Then you need to explain to me who the hell is buying? Martians? Who's buying? With what money? You can't go around talking nonsense and making yourself look stupid. You might not seem stupid to other people that think like you because they don't understand economics and finance and so on and MMT, pure MMT. They don't understand it. They just copy paste shit and run around and talk nonsense. But you look stupid because no one in their right mind, okay, can sit here and look at the data and say, nope, it's wrong. That's a form of insanity, straight up. Look at America's real GDP versus Europe. Okay, they went the austerity route. Look at them. They're all the way down here. America did what? Continued higher. Not good enough. Nothing is ever good enough for these people. You can have zero unemployment. They'll still be bitching. You can have, I don't know, 20% wage growth. Not good enough. They're just negative people. Okay? And again, it's the same people for the last 10 years who've been talking the same nonsense. Hyperinflation, dollar collapse, buy gold, buy silver, buy Bitcoin now. Don't buy stocks. And they missed out on the greatest stock market rally in the history of mankind. How about inflation? Let's talk about inflation. Right? Where is that all that inflation due to the price setter, the government? And, this is real printing of money when you raise interest rates. Right? Where is it? It's 1.77% core. Personal consumption 1.45. 2 fucking years. Saying the same shit, video after video. Buy gold, buy silver. What's happened? Nothing. Nothing has happened. There's no inflation. Here's more data for you doom and gloom. America's in decline. Household debt servicing payments, the blue line, is at multi-decade lows. Multi-decade lows. Debt has declined. How the hell can you decline debt? Grow the economy. Grow wages without a job that's paying a decent wage. How is America going to, collapse under this? It's not going to happen. Can we run into a period of a slowdown? Sure. Can the market pull back 20-30%? Sure. Why not? It's healthy. There's nothing wrong with that. We've been going up for 10 years. We've been down before. So what? But you don't understand the savings bubble. You don't have a clue of what the savings bubble is. All you know is government debt equals private sector assets. You copy paste it, meme it, parrot it, and you cheer. Woohoo! We're all rich. But to who in the private sector is it assets to? You? Me? The vast majority of it goes to the savings graveyard at the top of the hill. And those people that acquire those savings, those assets, okay, you know what they do with them? They don't put them underneath the mattress. They go out looking for yield, pushing asset prices up, whether it be stocks, bonds, whatever. Okay? The fire sector, finance, insurance, real estate, unproductive capital, making capital with capital, gorging capitalism, what I call it. Okay? It's not capitalism. Capitalism is if the money's in the functional economy, some of it is in the non-functional economy, which is savings. Okay? And everybody has a piece of it. I'll show you a chart. Before I show you the chart, here's the IMF forecast for global growth. Okay, 3.6% for next year. GDP now, it was 3.5, I think it's 2.8 now. This thing keeps changing back and forth. But again, we're growing the economy. Freight transportation index, kicking ass all over the place. Who the hell is shipping? Nobody has any money, according to you people, to the Americas in decline. Right? Garbage jobs. Well, shit, somebody's transporting something and paying for it. It's a bubble. The stock market is a bubble. How is it a bubble when earnings are growing? And they're forecasted to continue to grow. Well, they're buying back stocks. Good, let them. Let them buy back stocks because, remember, government debt equals private sector assets, right? Just not to you. Well, the vast majority doesn't go to you. It goes to the savings bubble. And those people do what with it? They go out and they buy stocks. And then they improve their earnings per share. They give dividends to themselves. Okay? So you want more printing? You want job guarantee? You think if you have a $23,000 job guarantee peeling gum off the pavement and planting flowers and sweeping the street is going to make America great again? That you're going to somehow do what with that $23,000? Go out and buy stocks, or barely make, have enough food to eat for you and a family of four? What are you going to do with a job guarantee? And who's it going to be for anyway? Convicts, drug dealers? Who? Single moms? Oh, and here's another little chart. This is my chart, okay? You see this blue line at the bottom, the light blue one is disposable income, and then disposable personal income. Then you have personal income. Then this is the household liabilities, which is the red one, and then you have GDP. Look where it was back in 2008. That's when I was warning shit was going to go down. Okay? Why? Because it was kicking ass. It was exceeding everything. It just exploded to the upside. Okay? Look at it back here. It looks beautiful. Very nice. Then it exploded. Well, what's happened since? We paid down the debt. Okay? We're back to more normal, quote-unquote, levels. Okay? So what implosion, what decline of America are you talking about? You don't even know what you're talking about. You're gone. Here's total credit. Rising. Okay? Remember, government debt equals all private sector savings, right? Well, so does private money. It goes in the savings bubble as well. Once you take out a loan of $100,000, you buy something from me, I take that money, I put it in savings. What do you think? I'm just going to sit there and look at it? No, I'm going to go out and invest with it. Like any normal human being with any kind of wealth in their, in their possession, they're going to do. They're going to go out and chase yield. They'll go in the savings bubble. Asset prices will rise. So what does MMT say about savings? Well, it says savings is a drain. That's it. Anything more to say about it? Nope. It's a drain. It's a drain in the economy. Okay, great. But is that the way it really works in the real world? Nope. Here's how it works in the real world. When government deficit spends, it goes into savings. Private sector savings. Non-functional, unproductive savings bubble. A graveyard at the top of the hill for the few. When banks lend, right? What happens? That money goes into the functional economy, right? Just like deficits, and then it ends up in savings as well. Okay? Because there's always more debt that is being taken on. And it's growing, and it's growing. Well, that money ends up somewhere. So, what do you think is going to happen? They're going to take those dollars, and they're going to go out and invest it in different asset classes. That's what they're going to do. And then you're going to see the stock market go up, and up. And then you're going to see bonds, and you're going to see, and so on. That's the savings bubble. So let me give you an example. Art Laffer comes out and says, look, trickle-down economics. Give more money to the rich, which means feed the savings bubble, okay? And then everybody's going to be richer. That somehow that the money that you're going to give into the savings bubble is going to make it back into the functional economy. Did that work? Nope. 40 years later, we're still waiting for that, all that money to flow back. Doesn't happen. MMT comes along and says government debt equals all private sector assets. Yes, just not to you. So that money goes into the functional economy, creates jobs, okay, but then it goes into savings bubble. Does it do anything about bringing the savings back into the functional economy? No, it doesn't. So what happens as a result to asset prices? They rise. The more net financial assets the private sector has, the more they can borrow against them. And then what happens then? Well, that money gets pumped into circulation, creates economic activity, and it goes into the savings bubbles. What happens to asset prices? They go up. You see how it works? So when you're sitting here saying, "Oh yeah, universal basic income," sit on the couch, with your wife beater shirt on, some ketchup all over it, whatever, watching TV. We'll give you a certain amount of money, and then we'll make America great again. Or a job guarantee program with 23,000. Go out and do what? Feed a family of four with it? Go out into the savings bubble. You're going to start investing in stocks? Take a bigger chunk out of it? No. No, absolutely not. That money's going to go to the top. Not going to you. That's completely the same thing as what Art Laffer is saying. Okay? Feed the savings bubble. It's not the way it's... Again, MMT is an economic tool. It can be used for good. It can be used for bad. All right? That just the way it is. It's not a fix-all ideology. It's not a political movement. All right? It's just an economic tool that can help you achieve certain goals. So you see these people with PhDs, I mean, ridiculous people, talking nonsense, and you're just like, what the fuck are they, what are they talking about? They're insane. Yeah. The little guy, I can understand. The guy's a retard, whatever. I mean, economic retard, right? He doesn't know what he's talking about. But the PhDs? Wow. But they'll come in my channel and say, "You idiot," and then run away. Won't explain why I'm an idiot, okay? Because he doesn't want to say anything. But you idiot, PhD. Instead of come in and say, "Look, my friend, this is the way it is. Bum, 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 bum." Come in and tell me, like a man. No. Run away. All right. So, what are we expecting? We know the economy is fine. We're creating double the job growth of population growth. Okay, so things are getting better, definitely. We want to see that continue into 2018. We don't want, I mean, it can come down to, I don't know, 180,000. That's fine, 170. That's okay. But we want to see it grow more than 185, because that's population growth. That's definitely going to fix the labor force participation, create more jobs, more wages, higher wage growth. And again, we'll be looking for that going into 2018. Deficits now with the new tax cut, they're going to start to increase. 181 billion is projected for 2018. Then we're going to hit that trillion dollar mark, 1.1 trillion for 2019 and 2020. Also, infrastructure possibly, at least being kicked around next year. All this will help the stock market. So here's another thing. Let's just back to the savings bubble thing. So what's happening is you're taking when you're paying higher interest, what happens is you're taking money out of the government. It's bypassing the functional economy and going into non-productive assets. Okay, that's what's happening with higher interest rates. Well, how about tax cuts? Well, tax cuts is the same thing, right? Money that would have went to taxes is now going to stay in the functional economy. Well, what is all this money going to do? Okay, it's going to boost asset prices. So that's bullish. The money from the tax cuts that does stay in the functional economy is going to boost economic activity. Okay? And then eventually that money is going to make it into the non-productive economy, right? So you see, you guys are going to be wrong for a while longer, with this, implosion of America, decline of America, and all this nonsense. You don't have the data to back it up. All you're telling me is vague hunches and feelings, but they're wrong. And by the way, is there a limit to the amount of savings that can go into a savings bubble? Answer is no. You can do this to infinity and beyond. Okay? So don't think there's some kind of constraint to the amount of money you can just keep printing. You just won't. What's going to happen is the people that are in the functional economy are not going to get a bigger slice of the pie in the savings bubble, unless savings start to flow from the savings bubble back into the functional economy, and deficits stop to grow, and loans stop to grow. Okay. So how do we accomplish that? Well, it sounds, like very difficult. Well, I can show you a way to do it without bigger government, without bureaucracy, okay, and without money printing. And the answer is very simple. Just reduce the amount of hours worked per year per employee. That's it. That's it. No, what do you mean? Well, what do I mean? It's very simple. That everybody that trained for a particular job, like a doctor, a pilot, or whatever, they get to stay in that field. And then there's less work hours, and that means you increase the amount of employees required. That's going to create a job scarcity. human labor capital scarcity. Well, when that happens, what happens to wages? Well, they grow. Okay? If you give me an argument against this, and I'm not saying that this is the only solution, okay? I'm just telling you this is the simplest solution I could come up with. I challenge anybody out there to give me a simpler one, okay? Not because I'm right and you're wrong, no, because I know collectively we're smarter than just my little pea brain. But I want you to tell me, okay, that if you reduce the amount of work hours and wages start, not and, wages will start to grow. It's supply and demand. It's very simple, okay? If you're going to argue against it, then it's arguing against full employment. That somehow full employment is no good. You're not going to have a very good, case for it, because if you think that something other than full employment is good, then you really need to check your economics understanding. So here's the way it works. You increase the amount of people who are working. You reduce the amount of hours per year. Now, this is important because I'm not telling you per day or per week or per month, per year, over the course of a year. Okay? So that's going to make a little bit more room for everybody else. And this is best to be done while unemployment is low. Okay? So you can push those wages higher. Now, if you have more discretionary income, and remember, employees are the customer. It's the same person. Customers don't come from Mars. It's the same person, right? If you have more discretionary income, one of three things is going to happen. Either you're going to consume more, which does what? Right? It's going to push up consumption, which is going to increase inflation. Okay? Since we have a large private debt overall, private debt will start to drop. Why? Because inflation is going to make the debt a smaller percentage of income. Okay? That's one. The next thing that could happen is you start paying off debt. Okay, great. Deflationary. So what? We can print in that case a little bit. Okay? To offset that decline. But remember, you have extra discretionary income, more than you have today. So even if you pay a little bit off into savings, you just won't get as much inflation. Not necessarily that you're going to go deflation. Okay? So that's a good thing. The third thing you're going to do that could happen is you're going to save. Okay? You're going to save. But you will get a bigger piece of the savings bubble. That's the point, right? We want to increase. We don't want the 5% owning 95% of the savings. We don't want that. We want you to get a little bit of a bigger piece of the pie, and everybody in the economy. So those are the three things. Either inflation is going to happen, you're going to reduce debt, or you're going to save. And any one of these can happen simultaneously, or one can lead for a period of time, and then the other one leads for a period of time, and whatever. And maybe there's times where it just gets a little bit slow. We can increase deficits. That's fine. I'm not against that. We can have a transitional job guarantee for a period of time. If the economy is slow, sure, why not? Okay, but again, what we're trying to accomplish here is for money to flow from savings back into the functional economy, and you only need a few trillion. You don't need 100 trillion. You just need a few trillion. Just pump it back in, and everything is going to work out great. And if you give me an argument again that, well, unemployment is going to, overtime is going to go away. No, I'm reducing the threshold for unemployment. You're going to get unemployment at a lower rate. See what I'm saying? Again, if you're going to argue, it's as if you're arguing against full employment. You're not going to have a good argument. If you have a better solution, come in with data. I want to hear it. But don't give me this pitchfork, go tax the rich and keep pumping money into the functional economy. That's not a solution. What are the other benefits of reducing hours worked? Well, it's fairly simple. Think about it. You work less, you have more time with your family. You can go out and enjoy your friends. Go out, on vacation. Vacation is good. It creates consumption, right? So that creates more jobs, right? But you're gonna have time to sit with your kids. Just family time, girlfriend time, boyfriend time, or both, or whatever. That's the point, right? And then automation. Well, automation is killing jobs. Well, you just solved for it. Solved for it. Why? Because you work less. Let automation do the rest of the work. But you're going to get that money out of the non-functional economy back into the functional economy, where we have access to gain a bigger piece of the pie. Now, when you have a scarcity in labor capital, companies are going to want to educate you. They're going to pay for your schooling, okay? And they're going to pay more for you because they need employees. So, again, another benefit. You see, there's no downsides, only benefits. Somebody said, well, it's reduced income. How the hell is it reduced income? It's the opposite of reduced income. How can you limit supply and prices go down? That's insane. I mean, the guy doesn't even understand basic economics, let alone MMT. But again, we have to start addressing gorging capitalism and the non-productive savings bubble, okay? And we need to figure out a way to pump money from the savings back into the functional economy. This is the conversation we should be having. Not this stupid job guarantee that just keep pumping. We'll just keep pumping into the savings bubble all day long, and hopefully we'll maintain full employment. Just keep pumping, yeah, and make this bigger. Let me show you a couple charts here, just real quickly. Here's the global bond market value. Okay, it's $49 trillion. Okay, let's look at the world stock market. Okay, this is an old one, and it's been some adjustments, but whatever. Take my word for it. It's $100 trillion. That's almost 150% of GDP. Where did that money come from? Private debt. Okay. Loans create deposits. Government debt equals private sector assets. Well, sort of loans, right? The only way you can destroy a loan is to pay it off. You think we're going to pay off our loans, our private debt? I don't think so. So where does that money end up? In the savings bubble. What do people do with the savings bubble? Put it under the mattress? No. They go out and speculate with it. And that's why you see the stock market rising. Look at that. Yeah. Boom. Okay. You have a piece of that? You don't have a piece of that. If you do, it's a laughable amount in comparison. Only thing a job guarantee would do is just have a steady stream of money being pumped into the savings bubble. That's all it's going to do. Because remember, if you get an income and you need to sustain life, you're going to go out and borrow. Why? Because you have a job. It's a job guarantee. You're guaranteed that job. So you go out and you're going to borrow against that, and then you're going to sell your future labor, and you made America great again while you're sitting there fucking peeling gum off the pavement. Christ, oh, insanity. This is the best that PhDs could come up with when unemployment is 4.1%. They're just going to feed the savings bubble and create bigger asset prices. You want to talk about neoliberalism that they claim they're against? Well, they're the essence of neoliberalism. Here's what they do with the savings bubble. They go out and the blue line, they buy back stock. Increase earnings per share. That's fine. I don't care. For me, it's great. Okay? And then they pay dividends to themselves. This is $500 billion worth, huh? 500 billion. 500 billion. 500 billion each. Where'd they find that money? Off your back. You're over here busting your tail trying to grow the economy, okay, make ends meet, and they get to buy back stock, pay dividends to themselves, blow asset bubbles, and you're going to go out and peel gum off the floor. Again, you don't know what you don't know. I get it. I do. But when you argue with me and you think you know what you're talking about, and you're coming up with all this more neoliberalism stuff and you don't even know it, that annoys me. That annoys me to no end. Again, the other benefit, okay, to reducing work hours. There will be a lot less of this because this money is going to be going back into the functional economy. Okay? Training people, educating them. And if you want deficits, okay, great, let's do deficits. Let's go out and pay for people to educate themselves for free. Pay for that. How about that? Okay? Because we need innovation. We need smart people. We need more quantum computing and whatever. That's what makes an economy great, not peeling gum off the floor. Okay? And that is the beauty of it. The beauty of reducing work hours. You can't point a finger at somebody, oh, look at that lazy. Yeah, he's peeling gum off the ground. Ugh. Right? Can't point a finger. Entitlements. Well, we're giving him a free job, man. You know? Everybody gets the benefit. That's the point, right? So what are you going to do? Point the finger at everybody? Well, you just don't work hard enough. You don't work enough hours. What are they going to say? That you're all lazy? That you're all poor? They're going to be complaining that they pay you too much? That's good. You have more discretionary income. But the job guarantee, remember, believe me, these guys with the job guarantee, none of them would be called dead in the middle of the winter, plowing a sidewalk or planting flowers or peeling gum off and none of them or their family members. It's always for somebody else. It's for the other guy, not for them. Hint, hint, wink, wink. Yeah. I want them fucking on the street, peeling my fucking gum off my pavement. I'll pay $23,000 for a real progressive to come and do that. I'll laugh my ass off. Every morning I'll fucking come out and laugh my ass off. It will make my day. But none of them want to do it. It's always about the other guy. Speaking of the fire sector, finance, insurance, and real estate, rental as a percentage of disposable income, all-time highs, at least, back to the 60s, at 3.8%. Okay? You want to keep feeding the savings bubble? You need Right. Lastly, I want to talk about this. All right. So what happened here? Why was interest rates high here and low here? What happened? Something happened right in here in the 80s. Something happened. So let's take a look at it. Sorry, but before I continue, not only do they take the money in the savings bubble and make capital off of capital, unproductive, they go out and borrow and juice that amount up in asset prices. Margin debt versus Dow Jones. See that? And that goes on throughout the world, all stock markets. So you guys don't know what the stock savings bubble is, you better figure it out quick. Alright, so what happened in the 80s? Why was there high inflation and then no inflation? Or low inflation? So here's, look at it. This is all the way back to the 50s. So what happened here, as a percentage of potential GDP, we were exceeding it. Okay? And then in the 80s somehow, we stopped beating those expectations. And we were underperforming. Okay, so something happened right in here. And whatever happened caused low inflation. Okay, and this is what happened. High debt, private debt. Okay, and here we have high savings bubble. High savings. Here we had low savings, and then here we had low debt. Okay, that's what happened. Okay, so here we had low savings, low debt, high savings, and interest rates came down. And it's only now, after 10 trillion in deficits, after all these trillions of dollars in private debt, did we finally, just so you can see it, I don't know if you can see it, finally start to exceed potential GDP. After all this money printing, quote unquote, and private debt, finally we started to a little bit. So that's what happened. This is what happened. Right in here, okay, is when inflation started to fall. Where did inflation start to occur? In asset prices, in stocks, in bonds. That's where the money is flowing to. Back here, the money was flowing into the productive economy, so we were exceeding GDP. The economy was growing. Okay, so we had high inflation. Okay, we come fast forward to this part, and suddenly, nope, all the inflation that's taking place is in asset prices. So, you don't think the savings bubble is real, that I'm just making shit up? Well, you're wrong. So one more time, just remember this. Low debt meant the money stayed in the functional economy, and we had high inflation as the economy grew. We have high debt, okay, high savings, and what happened? The money is going into the savings bubble, therefore we have low inflation. But yet Mike Norman is sitting here jerking himself off, telling you that, oh, there's inflation coming, go buy gold and silver, man. Okay? No. No. We went contango right in here. Everything started to inverse. We started producing more money and more money and more money and getting less and less GDP. And low inflation. And in my view, and I'm sure you guys have a better view, and I'm okay with it as long as you bring data. My view, if you don't reverse the savings bubble, then we're just going to continue the way of Japan, which is fine. I don't have a problem with it. I don't give a shit if that the GDP goes to 100 trillion. Zero fucks given, because the economy will still continue. Remember, they're not going to kill the host. That's not going to happen. Okay, and we can print to infinity. We know that. Okay, but you're not going to get a bigger piece of the savings pie, and inequality will persist. That's the difference. So all you guys out there that want to pitchfork the rich and take them down and tax them, you are causing the problem. You are causing the savings bubble with your stupid universal basic income and job guarantee. You are the neoliberal. But yet you pretend you're not. But you are. So you want tax cuts? You got tax cuts. There you go. 781 billion in 2018, and then 1.1 trillion for 19 and 20. All right? And some of it is going to go into the functional economy, which is good, and it should help improve unemployment and wage growth. Okay? And maybe get a little bit of inflation, hopefully. And the other vast majority of it will go in the savings bubble, and then asset prices will rise. Can we have a correction? Sure we can. Buy the rumor, sell the news, maybe down 20-30%. Okay, great. So what? You buy it. You buy it because it's going to go back up again. Okay, the savings bubble is not going to go away. That money is going to flow right back into savings because always money is going to chase yield. All right? Remember that. Now, my concerns for 2018, we have interest rates that are rising. Okay, they're a little bit front running and so on. So as those interest rates start to rise, they start to challenge the S&P earnings yield. And this is what I mean. It's a 3.88% now. Now, the market hasn't gone up below 4%. So that gives me a little bit of a pause for 2018. There we will get some kind of a correction as interest rates start to rise to 3%, and then earnings yield are so low, maybe money will shift from stocks to bonds or commodities or whatever. Okay, and people might take some profits and whatever. But again, the tax cut in the functional economy should help improve the economy. Interest rates are still low enough where they can still buy back stock with debt, but it's getting a little bit more expensive. Prices are higher, definitely, so the bar is higher from 2017. So there's a little bit in there of concern, but we'll keep an eye on it, and that's why we do a Patreon all the time. Um, so that's one of my main concerns. We want to see wages continue to grow. We want to see jobs continue to grow, as I said before. And if we go further out in 2018, what you'll see is that outlays continue to outpace revenues, especially now with the tax cut. And then they're going to continue to increase. I'm sure this is going to be updated now, maybe about 6% to 2027. So we do have enough money being pumped into the savings bubble to help push asset prices higher. Okay. Now, again, if there's some kind of a pullback, great. Pray for it. I'm going to sell at least one of my kidneys to go out and buy stocks when that happens, because we're going to look for the indicators and see the reversal when it happens, and then again, when it starts to improve, we'll see those indicators reverse again, based on facts and evidence and data, not vague hunches and feelings. And that's the way it works. And you do what you want to do. I'm not telling you anybody to buy or sell. Do whatever you want. But I'm just telling you, based on evidence, what I'm seeing. We want to see global growth continue to grow, right? 3.6%. We want to make sure that's what's playing out. That's important. Again, you got to look at the evidence and not vague hunches and feelings. And then we will invest and adjust accordingly. But overall, going forward, things are looking good. The economy is looking good. Let's see what happens 2018. That's it for me now, guys. I really appreciate everything. It's been great, almost 2 years now of doing this. I'm happy to announce that my former QMMT portfolio, where people were donating, I took those donations and put them in the stock market and Forex, and I traded for them, is up 25% almost for the year, which is great. It was a lot higher, but the Great Britain pound did some damage, but it doesn't matter. We're up for the year, and those guys will get that money back if they wish, or we can keep letting it ride, or whatever they want to do. I've learned a lot from this whole experience. I'm looking forward to learning a lot more. And again, if you guys are interested in coming down and joining us, please do. It's $5 a month, and come to Investing MMT. Click like and subscribe, and same thing with Pure MMT. I think you're going to find a lot of useful information there. That's it for now. Happy holidays, Merry Christmas, Happy New Year, and I'll see you guys next year. Take care. Talk to you soon. Bye-bye.